Hello and welcome to Business Today. I'm Siddharth Zarabi and with me my colleague Aabha Bhakaya. You're watching Market Masters, and on the show with us today, Samir Arora, founder and fund manager of Helios Capital. Samir, welcome to the show. Happy New Year. This is the first time we are speaking in 2026, and although it's 12 days into the year, it's been a very good day, and that really started with what US Ambassador to India Sergio Gore had to say earlier today, and you reacted to that. But before we come to you, let's first hear what Sergio Gore had to say.
I've traveled all over the world with President Trump, and I can attest that his friendship with Prime Minister Modi is real. The United States and India are bound not just by shared interest, but by a relationship anchored at the highest levels. Real friends can disagree, but always resolve their differences in the end. Last week, our great Secretary of State, Marco Rubio, powerfully stated that this year will be a year of reciprocity. We are raising the standard for diplomacy itself. That means fair trade, mutual respect, and shared security. Many of you have asked me for an update on the ongoing trade deal negotiations. Both sides continue to actively engage. In fact, the next call on trade will occur tomorrow. I also want to share with you today a new initiative that the United States launched just last month called PaxSilica. PaxSilica is a US-led strategic initiative to build a secure, prosperous, and innovation-driven silicon supply chain, from critical minerals and energy inputs to advanced manufacturing, semiconductors, AI development, and logistics. Nations that joined last month include Japan, South Korea, the United Kingdom, and Israel. Today, I'm pleased to announce that India will be invited to join this group of nations as a full member next month.
Well, Samir, it's been a fantastic beginning, really, and you saw how the Sensex jumped and how the Nifty reacted, and you yourself reacted. Let's also bring that up on the screen as I come to you. What does this really mean? Good news finally, or should we still be a little cautious?
Well, I don't know whether it's good news in the sense, but people had assumed the worst, as if we are going to have 500% tariffs and that US will, if it happened, like you would lose India as a friend for years maybe, and also that whether India will keep insisting that even if we have 500% or 100% tariff, we will still import that last 1 million barrels of oil. So that also was a bit overdone, that as if the natural next part to this new bill or whatever that is being introduced is that it is made or designed only for India. So in that sense, it was an extreme, and what Ambassador said has sort of pulled it back a little bit. I don't think this means that tomorrow some deal is happening or some great positive thing is happening, but I think the other end was extreme. So you've come back to a slightly normal. I am actually right now a little happier that all this has happened before the budget, because now the government has to take some decisive steps to say that we can handle this without US, and if US deal happens and all that, then that is like Sone pe suhaga.
Suhaga, that's absolutely right. Before I go to Aabha, the major macro issue that comes out of it, what is your sense about the ability of our markets to look beyond the tariff headlines? Because there is so much more that is happening. You could also talk that Trump's other actions have a positive impact indirectly, for example, on crude oil, with more Venezuelan crude that will set to come into the market. So how should markets look at this beyond the tariff headlines?
Right now, it is not an issue on whether our country, India, can handle the economic fallout or all that. I think that is not being viewed. It is just an issue that if you are not friends with US, then many US investors, many US FDI guys will not want to make high profile India related announcements, because they will feel that, you know, there is some relationship fraying of that or whatever. I don't think it is, because even our exports in November were pretty good. So it is not that literally, and also many people say that if at 50% tariff, it's become so difficult to export, how will 100 and 200% tariff make a difference? I think it is not that. It is just that the US is a big influencer indirectly, implicitly on institutional flows and large announcements being made in terms of investments. Plus, there is this thing also in the discussion that these tariffs can be introduced, and that means that they also may look at our services and exports and all that, or GCCs. Therefore, to have good relations with US, and at least similar to what other countries have, where today we seem to be highlighted as one of the one or two with very high tariffs. So it's that more than literally whether any economic impact is there or not, and whether oil price is $2 more or $2 less.
I mean, to some extent, markets are pricing in an earnings recovery, but it's still early days, but we've seen a few surprises already. And given the kind of heightened valuations we're currently at, markets are using any opportunity to actually book profits rather than reward some of the good performance coming in from companies. Even a minor blip is just getting completely sold out. So what's your view on this?
No, I disagree with that. I disagree that it has anything to do with valuation. This is more to justify the fact that it's not happening. Simply by looking at the fact that when let's say the FII has a choice more than Indian investor of whether to be in India or not, and they are selling, and last year they sold some $17-18 billion. But out of that, 10 billion was sold in January itself. So from February 1 to December 31, they sold about $7 billion, which is less than 1% of their holdings in India. And in that 7 billion of net selling, and why I'm separating it is because 11 continuous months, it was only 7 billion. January, the whole world, outside US had selling because the money went into US, is we had two specific issues in these 11 months. One was the India-Pakistan war, and second was the tariff war. And in both of them, these were unique to India. And during that time, there were so many IPOs and new age IPOs and old age IPOs, and everybody believes that these IPOs are of loss-making companies and high PE companies and very much into the future growth companies. And all of them were aggressively bought in the anchor and otherwise by foreign investors. And what they sold, even if you include the 10 billion of January, were the older names, I guess, the banks, the IT companies, the consumer companies, which in theory had much lower valuations than maybe some previous 2-3 years because of lower appreciation in those companies. So I don't think it has to do as much with valuations. It has to do with the fact that on the margin we've had two negative events, and both were related to only India and not to the region and not to our peer group. Also, if you see the real outflow started actually from July. In March, April, May, June, when the rest of the world was getting inflows, even India was getting inflows. And it was in July end or August 1st that the tariff thing came up. So I think it's very much related to that at one level, and then it becomes a self-fulfilling thing. But you make the market go up 10 days in a row for some logical reason, like tariff, and something that, there is some 25% tariff or something. And the whole thing will reverse, saying that India has underperformed for 1 year. This underperformance is the worst in 30 years. That during this time, Indian government has made many reforms on GST, on income tax, on interest rate reduction, on whatever reforms in liquidity injection, and therefore it's a natural our premium to emerging markets has fallen, our absolute P is now X% lower. Everything can be reversed. You just have to find one trigger, and that trigger as of now I think is either something wildly good in the budget or just the tariff this thing coming to normal levels.
Samir, could that wildly good thing in the budget relate to capital markets taxation? We all know that that's a subject that you've commented on.
Close to my heart, because I analyze these things because I'm a FII. I think that one should be viewed as just, if it happens, A, very positive, and B, not giving a gift to anybody, but reversal of something which was clearly a bit out of line. Because what happens is when a foreign investor is looking at all the markets, let's say Indian market was giving 11, 12%, 13% rupee type return, and you are losing around 3-4% on the dollar. So you're making 10%. In other countries, you might be making 8 or 9. You're not making 1 or 2. But as soon as India has a 15% average tax and other countries have 0, you fall below half of those countries in terms of returns, and that obviously will make a difference. And these things get highlighted only in bad times. Why will they get highlighted when the market is up 20%, which once in a while it happened? So it was leading to some. Now somebody can say this has been going on since 2018, so what is new? No, nothing is new. But now you want to reverse the thing. You want to show to the world that American investors are investing in our country, let us say, as one of the points. And the way to do that is to reverse this and put us back on par with what every other country. By the way, one more thing, just note that the US government is effectively giving up nearly $500-700 million of taxes from Indian investors, because when Indian investors invest in US, and these stocks have done well, so Indian investors, let's say they have 20 billion outside India and they made 20% return last year. So the Indian investors made $4 billion of profit, on which the US could have charged you a 20% tax. It said, no, keep it. So then the Indian government...
Samir, please don't give ideas to the Trump team.
No, I'm saying India should appreciate they gave away $800 million, we didn't charge the Indian, and the Indian government was allowed to charge. So this is the way it is everywhere. There is no tax on foreign investors. But I'm saying now, let's not do it only for foreign, because that will be too complicated. Just remove it for everybody. And if you want little bit in STT by 1 basis point, you will recover most of it. Plus, anyway, what is the how much tax do we collect? Which year should we consider? This year, last year, there will be no tax collection.
Correct.
So if you benchmark against that, and anyway, there's very limited tax. Or if you want even further, do it for a few years. Do it for 8, 7 years, 9 years, 5 years. See what happens.
So, Samir, from a budget point of view, what are you expecting this time around in terms of, is there any commentary you're looking forward to in terms of how they position India? Or this time, would you expect structural triggers or continuing to see action on the household income front?
Nothing. I'm saying nothing. I'm saying nothing. The market will see nothing. Nothing on education or social or roads, building. Nobody has energy for that. It is either something happens before that and the market recovers, but these kind of things are not, they are meant for normal times. India has underperformed by more than 30%. In 30 years, it has not happened. In addition, we have lost on the currency. So now, this kind of thing that, we are focusing on something, that'll take 1 year to, those things are important. Nobody is denying that. But they are there for as a backdrop to say what we should think for the long term. Right now, it is that either some events happen or we do something really different, and I can't imagine many other very different things. So therefore, tax is one easy way, and the tax one is because it's a bit out of line. So it's not that you are gifting anybody. It is out of line with world practice.
Samir, I want to pick up one of the themes that's kind of been in play over the past few months, and this is the consumption story. But it's not about just the GST-led, cut-led demand. It's also about what is happening at the state level, Samir, where you are seeing a lot more of tax revenues being given out as welfare spends. And that will stay. And we have seen that no major scheme has been rolled back either by the states or by the center so far. So broadly, is 2026 going to be a year where the consumption theme continues to pay off for investors?
So you are right, but don't say continues to, because it hasn't paid for the last few years. Particularly the larger staples and the larger companies, even from a stock market point of view, even the consumer durable type companies have not done well, primarily because there has been less demand, but also there are too many competitors making refrigerators and microwaves and ACs and all that. But as a theme, consumer is a good theme, but you have to, as we say, follow the money. So the consumer is spending money on experiences, it is spending it on food and travel and things like that, rather than spending the next dollar. For example, if they buy AirPods or something like that. Now, 5 years ago, not 5, but maybe 10, 15 years ago, this category didn't exist, and God knows how many billions Indians are spending on, these kind of things. So the wallet is being used for different things, and some of them you can find in the stock market, and some you can say, okay, big picture, it is helping India. So, for example, we own this company, Phoenix Mills, only because we don't know where they are spending, but they seem to be spending, and some are spending on foreign companies or private companies. But in the end, consumer is growing, but you're not able to pinpoint or access many of the, for example, if they buy Apple phones, now what do I do? So we used to say we buy Bajaj Finance because it is funding these phones and many others. Or you can say you buy some of these retail oriented whatever platform stroke malls or whatever, or you buy food delivery or something, because consumer is, or even the home quick commerce, you don't know what he's spending, but they have ability to spend because of tax cut, GST cut, interest rate cut, etc., but more difficult to be precise.
Talking about central banks, Samir, and this morning, of course, we were looking at Jerome Powell being in the hot seat, and tomorrow you never know. I mean, what world are we living in? The Fed chair is going to land up in jail for all you know.
No. But first thing is, he's anyway retiring in 4 months. Okay. So in 4 months, nothing is happening. These are all things for, I don't know why in the last minute, anyway, he has only 4 months left. What is the need to start cases or investigate or on what he's doing on the building anyway? It is as interesting as any other market.
Absolutely. And
now you can call US as a large emerging market from a market and all these things about.
That's a good one.
Yeah. And he's continuing to push pressure on these rates, but what we're also seeing on the back of all these moves on global liquidity and central bank moves and so on and so forth is what's happening on gold and silver prices. And there's no escaping that. They've just become the shining stars in the market right now. I think they're beating everything else hands down. Have you been watching this trajectory, and are you also sort of getting a...
So, I am an equity guy, but I own a lot of gold personally, maybe more than 10-12% of my total my AUM. And also we have a global fund in which we own about 6.5%. We bought 5 and something recently, as in some 6-9 months ago. So, but broadly the idea is that gold has some logic. I don't see how silver has a logic. Gold actually is a holdable 5,000-year history, bought by central banks, bought by big ETFs. Silver cannot be hoarded, so now they have found reasons that it is used in solar and it is used in EVs and all, which if it's an industrial thing, then who cares kind of thing, beyond a shorter term. But both are going up. The good thing is that you don't hear anything about these irritating Bitcoin guys who are much more irritating than anybody else you can find on social media. Now they are all keeping a low profile because it has been proven that gold is doing well because of a 5,000-year history. Okay, so let's say silver is also doing well, I don't mind. But Bitcoin guys would come in with these holier than thou, that you don't know how governments are and how currencies and all these lectures, and Bitcoin has sort of fallen off the map. So which is the good part. But gold I own. Whether somebody should buy new gold, I don't know. I have not bought for at least 9-8 months more, maybe.
That's a good point about gold, and of course many people are holding back to buy at these levels. We don't know what kind of correction, if at all, that will happen. On the BFSI sector, what are your views? Are we now entering a sustained upcycle?
Well, first, let's have an up cycle, then we'll worry about sustained part of it. So these days, at least the NBFCs have done well because of whatever lower rates, and the banks, particularly these large banks like I own ICICI and HDFC Bank, they have done, ICICI suppose done better than HDFC, but these banks have to do a little better, and then we will say about sustained. But broadly, it is supposed to, because they have gone through the cycle. If you talk about HDFC and in ICICI, I hope that Mr. Bakshi stays for another term, and then we could say large banks are doing well, and the NBFCs have been doing well anyway, like these Shriram and Chola and Bajaj Finance and all. Broadly, as I said, there is still decent growth, and there is clearly liquidity improvement and also lower interest rates as a consequence or otherwise, and therefore otherwise, yeah, they are supposed to be better among all the big picture themes you can find in our market.
On financials. By the way, Samir, did the narrowing of the GDP numbers between real and nominal GDP, did that surprise you at all?
No, so that's what I'm saying. What happens is that the nominal growth doesn't look bad. I mean, doesn't look unreasonable or fudged or whatever.
Yeah.
It's the inflation calculation, I think, which does it, because they start with the nominal, and nominal 8-9 actually is below average. But if you say inflation is near zero, then you say real is also 8, that looks above average.
Got it.
That is the confusion. What you would want is that the nominal be 10, 11, 12 and the real be 8, so then let it be 2-3% inflation. Let's get some higher double-digit number on the top line of the corporate sector. So right now, both look okay, except that the inflation looks a bit, I don't know, unreasonably low as far as our experience in dealing with inflation is concerned. So I think nominal growth is okay. In that case, the nominal growth is low, but the real growth looks too high.
Samir, in terms of themes, and we are still at the start of the calendar year, what are the themes that you are looking at very closely for the current year?
So, in theory, we look at stocks. In theory, I say, because sometimes there is a bias towards some sectors. So, for example, right now we have a bias against Indian IT services. So, whether on bottom we say we don't like. On the other hand, by aggregating the different stocks, we suddenly find that, oh, we have some maybe 15-20% in what you call new age companies. But new age is not a theme because they are in different areas, but in the end we say, this is good, so it ends up. So in that sense, you can say that relative to market or relative to benchmark or peers, Helios fund will have more in these new age businesses and corresponding underweight to near zero weight in IT services.
From the new age companies, Samir, the top ones that you like.
So we like Zomato, that is Eternal, we like Paytm, we like PB Fintech, we like Ather, we like Delivery, we like Physics Wala. Basically, the idea is that the company, it should be clear that it is doing something different, and that different thing has been accepted by the by the customer, that there is something valuable happening, and that the old guys are not able to react to this, or they are reacting a little bit, and then you have to think a little bit, like 2 years, 3 years out, and not immediately and say, oh my God, because this company just went from loss to profit, and therefore its profit was near zero, but profit. So therefore, when I multiply by market cap, oh my God, the P, how can you buy a company with 200 P? You have to think a little bit that whether this thing is really useful and has been accepted by the customer or not. We are not doing some VC investing or early stage investing that we don't even know the market, but we are betting on some management. No.
Samir, I think we are not able to hear you, Samir. Perhaps the connection's gone mute. If you could
Okay, I don't know.
Now
So
you're
I don't
back.
know
Now
at
you're
which
back.
point you didn't hear.
No. So the last 10 seconds really, but now you are back. So please make that.
So I was saying basically that as long as you can see that the service is genuinely useful and not some fancy, random stuff, and that the consumer or the customer of that service has accepted it, then you just have to give them a little bit of time, because the growth rate in these is much, much higher than what IT is offering or what consumer staples are offering. And in a mix and match of a 100 rupee portfolio, we think that some 15-20% should be in high growth. And as I said, first thing, service that is accepted by the consumer, customer of that company or of that industry.
Samir, I had a question, but that's less to do with India and more to do with the US market and globally, and this is the AI boom. You yourself have sort of spoken about it and you know about this. These concerns that a lot of people say about overvaluations in the AI space and its likely broader impact on the markets. What are your thoughts on this subject? Because several people talk about it in India.
So actually the AI valuation is not of a big issue. The issue is that the AI spending is creating a large part of the growth, in the sense that the AI high valuation is in mostly unlisted companies. Because the Google or Microsoft or Amazon, when they are investing, they are spending maybe 1 year of profit, 2 years of profit. So, okay, if you think it has been wasted, that is the worst. But the OpenAI, whether it should be valued at 800 billion or space, which is not even AI, but SpaceX should go public at $1.5 trillion. Now, suppose it doesn't go public at 1.5, but goes public at 400 billion. Who cares? Some 100 investors, private equity, overpaid, it doesn't change the rest of the world. The rest of the world, that is the stock market related, which are the millions of customers, they care if a large part of listed universe is affected or has leverage or has invested in these, like Oracle is falling or has fallen a lot because they committed. So there are very few of those companies. Anyway, 93% of US 93, but because they say big seven, so 493 companies are up maybe 5% in a year. So I don't think it is a very big bubble type or a valuation type issue, because it is affecting mostly the unlisted guys and very few listed guys. But if it will not be clear in 1 year or 6 months that this is a complete waste. That doesn't look. This is genuinely something there. Now, whether it can correct a little bit, but if Google loses 50 billion, who cares? Even Google doesn't care, I think. So these guys are so
Samir,
big.
If you were to compare it with the dot-com boom, or since you made it clear about the investment and spending, the telecom boom and those very massive global buyouts we saw well over 2 decades ago, does this compare with that, or like you were hinting?
It doesn't compare. It doesn't compare, because there what happened was that because it was easy to get in, there were 100 companies delivering you pet food and delivering you at that time web van to deliver you home groceries, which Zomato and all are doing now. And there were thousands of guys who could do it on their own. For example, this guy, what's his name? The guy who comes on Shark Tank. He started a company called Globe.com, and those companies went to zero in 1 minute. OpenAI and all these companies otherwise are a handful, maybe 30-40 companies. It's not randomly every fellow getting into AI because there's nothing they can do about it. It's such a high starting entry cost business.
Absolutely.
You have to be in the list for NVIDIA and all to even give you the chips for you to do, training and all that. So this is a handful of these 15 names only. If somebody says, tell me the 18th name, nobody knows. Maybe there are. And these guys are all in private space, so it will affect some people, but it's not that wild in terms of the number of investors, customers and all that can be affected. Plus, they will be supported for some time anyway. It's the stock market which is difficult to handle if the price falls. The private guys, why do we say in India that these companies have been allowed to make losses? Well, the private guy says, 1 more year, let's see what happens. They won't easily go away. Right now, they are dreaming that it's an 800 billion company. But there is no external check every day. It is being made by those 150, 30 investors only. It won't suddenly fall and say tomorrow that it is now 50 billion valuation. Won't happen so easily. When you go listed, that's why the game changes. That's why the unlisted guys are able to handle losses. Because as long as they and their investors are happy and there is some story, they continue. It might be wrong, they might in the end lose, but it won't happen in a short period of time.
Samir, I wanted to circle back, and I got your point about FPI's pulling out and what kind of trigger that we're waiting for. But until just recently, we've been touting the whole domestic story, which currently, and I know it's just in the very short term, but in the last week is looking a little less robust. What would you say going forward? And given how you also said nothing much to be expected from the budget, etc., is the domestic story resilient enough to ride out the current geopolitical uncertainty?
So you mean domestic inflow story? Domestic, yeah. I think by the way, the foreign investor will come back plus minus. There is some uncertainty on this tariff thing, and as we saw, even a slightest of positive news, you can have a quick reversal simply because A, India has underperformed a lot. B, nobody can really believe that the US will completely burn its relations with India, and India has become relatively a reversal trade of AI, let us say you want to bet on whether US President Trump will have weak midterm elections. What play will you have? You'll have India for that also. There are many angles now in this world for which, and also one more thing, the foreign investors or institutional investors don't do all or none. India's weight finally in the emerging market indices is 15%. And if they are currently at 13, I don't think there's any case to say that they want to make it 10%. So if overall flows are there, you will get less, you may get more, but it is not like this situation. This situation is there and has been restarted because of this second, third, whatever round that now we are going for a 500% tariff or that Senator Graham or whatever did. This is not a sustainable thing. We are not doing so badly as a country, as an economy, as a market that people have to take it out to zero in India. And they are actually not doing it also like that. If you do last 3-4 months, that is October, November, December, and current up to this point, it might be plus minus $2-3 billion, which is not a earth-shaking thing. And even now, if you do a IPO of some company, again the same foreign investors invest. If you see in the anchor book or if you see in the normal book, these issues get oversubscribed 50 times, 100 times. It's the same gang.
Absolutely, Samir, and very clearly interesting times that we are in. We started the conversation by referring to what Sergio Gore, the US Ambassador to India, said, and that kind of triggered a good reaction, and we'll see how that pans out. And
there's one more thing. If on 14th the US Supreme Court says that the tariffs are exceeding your powers or whatever, and even though the US President and others have said that they will find other ways of doing it, but at least the whole issue would have become that the current this thing is illegal. And if you see the betting market, that Kalshi or whatever, there's a 76% chance or something that Supreme Court will say that you cannot do these tariffs. Let's see. We have to look at every positive coming up in the near future, and at some point we will have enough positives to not look at every small thing. But right now, one comment from the ambassador, one comment from the Supreme Court, and it shows you that how much on the negative side we have pushed the market.
Absolutely, and eternal optimism might perhaps be the best way out of this situation. We'll continue to track both the markets and the macro trends. Remember, viewers, this is also a time when the President of the United States has perhaps half in jest or maybe fully seriously said that he's also the President of Venezuela. So we live in very, very interesting times and keeping...
And I would say last line, eternally optimistic and optimistic on eternal.
Okay, that's a good call right at the very end of this fantastic conversation. Samir Arora, as always, thank you very much for your time with us today. Viewers, we slip into a break. We'll come back with more. Until then, goodbye.
The world's most powerful double-engine coverage, where access meets expertise. Davos Brainstorm, 19th to 23rd January. Only on India Today and Business Today.